Anybody? Gladys, could you just highlight to us what you're expecting to learn today? Anybody just to tell us what they're expecting to learn today, what they would really love Lyapa to shed light on. Hello, everybody. Still waiting for. I just need to get some noise in the room. Can somebody just tell us what they're expecting to learn from Lyapa? After this session is done, at least there should be one or two things that you should say. At least I have learned ABCD. So, what is that one thing that you should be hoping to have learned or picked up from this? Okay, guys. I assume that none of us here wants to share what they're hoping to learn. So we'll be kickstarting very soon. Just waiting for a few more people to join in, and then we're good to go. Okay, so we start in, I think, in the next 2 minutes. So one thing that I wish to highlight is that as we all are here to learn, let's ensure that we get our notebook, our pens ready. Also, let's get a cup of tea because it's really cold. So as you're learning, just ensure that you have a cup of tea with you. You have your notebook and your pen ready to jot down the points that will be shared by Lyapa, just so that we ensure that at the end of this session, really, it's not just going to be a session like any other, but we would have taken note of each and every point that would have been highlighted, and then would have equally begun to implement what our facilitator and speaker would have shared with us today. Okay, I'm just trying to connect with our speaker, just trying to ensure that she's in the room. I can't see her here. All right, so ladies and gentlemen, our speaker is just. If this was a physical meeting, I would have said our speaker is making her way to the stage. But maybe I might still go ahead and say the same. Our speaker is making her way to the platform. Should begin in a minute. So once again, welcome to the Yamoka Africa Startup Converse. The idea is to create a platform for knowledge exchange between experts and startup companies, startup founders, just so that we ensure that these experts are able to share knowledge, the knowledge that they would have acquired over time during their course of work. They would then share it with most of us that are still starting up, getting started with our race in business. So that's the idea with this. And today we're privileged to have Lyapa Mbewe, who is a seasoned financial literacy advisor, while equally being an investment advisor. So I believe she's a better place to speak to startup founders, startup companies, just so that we ensure that even as you make your money, you're able to track your finances, you're able to know where has this one kwacha going to, where has this amount of money going to, so at the end of the year, able to look back and say, this is how we have moved financially. This is how things have been moving, unlike a situation where you begin to work with assumptions, really, so which isn't a good thing. So that's the idea with this. I'm not sure why Lyapa is not in the room. Lyapa, are you in the room? If you're in the room, just kindly signal. Okay, so our speaker seems to be having a challenge with Wi-Fi, but she's assured me that in the next minute or two she'll be making her way to the stage. So at least I can see Toela here. She's the first one I've noticed. So Toela, could you just give us what are you expecting from this session? I know I caught you unawares. Just kindly unmute your microphone. Yes, Toela, please go ahead. Just tell us what, by the time that it's 17 hours, what are you expecting to have learned?
Hi, are you able to get me now? Good. Okay, it's actually my first time to attend, and I don't know. I'm just so far excited.
Okay.
Yeah.
I believe you run a business, right? So, with regards to cash flow management, what are you hoping to
learn? I think how to manage my business. It's one of the things. Yeah.
Okay.
And I don't know. It's the thing where I just want to hear it first, then I think that's when I'll be able to respond. Yeah.
Perfect. That's
I'm
good.
just everywhere.
Okay. So can I get another person just to share with us what they are expecting to learn? What are the expectations from the session? I think I'll have to deliberately just choose. Mwansa Chalo, could you share with us what you are hoping to learn from this session? Mwansa, can you get me?
Hi, I can get you. Yes. Thanks
Right.
about. I was quite a bit unaware, so I'm just trying to listen in, really. And not.
Okay, yeah. So our speaker will be starting up in a few minutes from now. So I'm basically just trying to find out from you, what are you hoping to learn after this session? What are you hoping to pick up from this cash flow management session?
I mean, for startup entrepreneurs like myself, cash flow is a big issue currently, because you know that a lot of our clients are cash strapped. So I'm just eager to learn what the sort of tools we could be using, if there are any that we don't know about that are out there. I think that would be something that would be interesting for us to find out, so that we can see how best we can manage and keep ourselves afloat. Because they say cash is king, so you have to try and safeguard it as much as possible. So, you have to be on top of your game. So yeah, that's the conversation I'm hoping to listen in on. Yeah.
Beautiful, beautiful. Cash is certainly king, and especially in a time such as this, where cash is really scarce now. So whatever money that you have, you have to ensure that you guard it jealously. If you're going to spend any coin, any ngo, you have to ensure that this is an investment of some sort. You're hoping to get a return on that expenditure, a return on that investment, really. So that really is how we should manage our finances here. And I'm certain that our speaker is going to highlight more on that. Could you get another person just to share with us what they're expecting as we wait for our speaker to make their way to the stage? Malama Chavala, could you share that with us?
Hello, thank you. So for me, I'm just looking forward to learn more on how to track the cash in the business, the one coming in and the one going out. I'm looking forward to learn how to manage all that, and learning, of course, how to be accountable with the money in the business. Yeah, thank you.
Okay. Certainly, that is the way to go. I think accountability, despite the fact that this is your business, it's your company that you're running, but it's just important that you're accountable, that you're able to look back and say, I made this amount of money and this is how I spent it. You should be able to ask yourself questions like, was it money worth spending, and all those sort of things. So we should be able to ask ourselves such questions. So yeah. Mr. Julius, you're welcome. And I coach you unawares as well. Okay, so just exercise a bit of patience as we wait for our speaker to make her entrance. As we patiently wait for a speaker, could we have another person to share with us, just highlight what they are expecting to learn, and why they think cash flow management for a startup is important. Julius, could you share that with us?
Hello.
Hi, Julius.
Hi. Is there another Julia? So it's me, because I just joined like 15 seconds ago, so I even don't know what the question is. I don't know what's going on.
Okay. So I'm just trying to find out what are you hoping to learn? Why do you think cash flow management is important for a startup?
That's a good question. I think it's important in that as a startup you have to know what your cash flow is like, because that's the bloodline of your venture. Just like we manage finances at a personal level, like knowing what you're spending on, so that you don't find yourself being broke. And for a startup or a company, it's very important in that you have to know what your revenue streams are, and which one is bringing in more money and which one is bringing less, and how do you just balance the whole thing so that at the end of the day you do not find yourself bankrupt as an institution, because you can make a lot of money as an institution, but if you are not managing very well your resources in as what is going out and what is coming in, you may find that money is just passing through your institution and you are not growing. So it's just very important to be financially literate. And for me, anyway, that's what even brought me to this conversation, just to even learn from others, like how they are managing their resources, and also what their ideas are, and just certain practices which they've put in place.
Beautiful. That's good to hear, Julius, because I think at times it only takes hearing what other people have implemented, how other people are doing certain things, that would begin to pick up principles from what they do, and then we equally try and implement them, and then do likewise, and would then see how our startup businesses would soar. Could we have another person just share with us the importance of cash flow management and what they're hoping to pick up from this session? Could we have another person, please?
Am I allowed also to speak?
Certainly, please do.
Yeah, so myself, I'm hoping to learn from the experts how best you can come up with systems, like that, systems that are easy to, to follow, to be able to track your revenue, that's like your income and expenditure. So to be able to, because that is the only way you can be able to ascertain whether you are making profit or not. And some of these things, it's not like we can just learn a new habit when the money is plenty, when you have 1 million kwacha or 2 million kwacha in the account, then you can start now to be strict. This is how I'm going to spend every kwacha of it. You have to learn to the principles. I think at the beginning, it's a very difficult to then start now. You have to adhere to, yet it's cardinal to business. As long as you can't dream of growth You can be excited, you can have a brilliant idea, you can have a brilliant solution to a real problem. But at the end of the day, if you can't track your income, if you can't track your expenditure, it's difficult. We can't even talk about scaling up. This is just like it's staple food. That's how I look at it. It's like it's very important to be able to track your income from the beginning. You know, sometimes when we are starting as a startup, 100 kwacha, you just neglect it, you just use it. You don't care about getting a receipt. You don't care about filing it somewhere just to say, I got this money, whether the money came from a shareholder or the money comes from somewhere. As long as you are using money as a business, it's coming from somewhere. Let's learn to account for it from the very beginning. When the money becomes more coming, it becomes difficult to catch up with that habit. So I thank you very much.
All right, thank you so much. So without wasting much of time, because we've been patiently waiting for our speaker of the day. Right, and she's finally made it here. So, ladies and gentlemen, today we're privileged to be joined by Lyapa Mbewe, who is an investment financial advisor and planner with over 8 years in sales, retail management, branding, marketing, and financial wealth advisory for both local and offshore products. So, Mrs. Mbewe, you could kindly make your way to the stage.
Hi, Joseph. Thank you so Hello?
Yes, Lyapa, please go ahead.
Okay, perfect. Thank you so much for having me. I am very excited about today's session, and this is something for me that I take very personal in terms of financial literacy, financial resilience, cash flow management, financial management, both on a personal level for everyone and also in your businesses. So yeah, so for me, this is something that I want you to take not just as one of those events or sessions that you've been to where you just grasp some knowledge and keep it in a notebook somewhere. I would want you to leave it. I would want it to have a mentality shift, a mindset shift as you listen. Because one thing I know about money is at the end of the day is this is something that you want to make personal for yourself. Yeah. So today we're going to talk about cost management or financial management. But first, I would want to talk about financial resilience. So we'll talk about cost management and financial resilience. Why? Because I believe that minus financial resilience, whatever it is that we talk post is something that you won't grasp to the fullest. Yeah. So when I talk about financial resilience, it's talking about money. It's about how you handle money. What does money mean to you as an individual before we can even relate it to your business? Yeah. I hope this is making sense for someone. So the first thing is being fully aware or present with anything in terms of life's events, be it post-COVID-19, be it the time that you started your business, but you need to be present when it comes to money. It's getting yourself a backbone when it comes to money. Yeah? So the first things first is of course, responding to opportunity, which is protection for yourself. So what type of a person are you when it comes to responding to opportunity? Do you have a sidelined way or a systematic way of how to do things in terms of responding to opportunity? The problem is when you don't know so much about money or what money can do for you, I can assure you that it will pass you by almost every single time. Why? Because you don't have a plan for money. What is your $1 million plan? My mentor always says. So you need to be aware. Once you are aware about what's going on around you when it comes to money, you'll be able to grasp opportunity as and when it comes. You'll be able to see opportunity, to see who's in the room and know that, you know what, this person or this can benefit me or benefit my business in a certain way. And that's financial resilience, getting a backbone when it comes to money, being very much aware of what money can do for you. Yeah. So I'm sure everyone knows this, that money flows to those that value it the most. So we've heard of the Fortune billionaires that make so much money. Why? Because they're aware of what money can do for them. So money does flow to them. Why? Because they value it. Right now, we value them by how much they make per minute. That is because they know, they are very much aware of what money can do for them. And that's something that I want you to be aware of. A mentality shift that I need you to be aware of is, what can money do for me? Then from there, you actually start seeing opportunities wherever you turn, because you know that, you know what, I can do this, or money can do this for me. Yeah. So management systems, or money management system, sorry, goes beyond. Before we get into the business sector, I want you to know what your management system looks like as an individual. Do you have a plan? What does your management system look like as an individual? Investing, savings, insurance, saving for rainy days. Do you have an emergency fund? Do you have a systematic way, even if you make profits from your business, do you know where your money goes? Do you have a plan for what your profits are supposed to do for you? You know, because we are so prone to the mentality of income. You want money to come in all the time. We now have a lot of side businesses, which is what we're going to be talking about. We are entrepreneurs. We are driven to ensure that a lot of money comes in. But when that money comes in, do you have a plan for it? What is your money management system? Yeah. Do you know about investments? Do you know about savings? Do you know about expanding your businesses? Do you know about taking feasibility tests on your businesses to see how you can expand your businesses? Do you ever look at what's trending on the market? Do you look at your trends as a business to see what it is that how broad your business can go? But at the same time, when that money comes in, do you have a plan for it? And that's where financial resilience comes in. That's where you start building your backbone as an entrepreneur, once you master your money management system. So that is something that can save you a lot of losses, yeah, when you know what to do with your money. Because I've seen a lot of people that get contracts, that get tenders, and make huge amounts of money overnight and lose it in a blink of an eye. Why? Because they don't have systematic money management systems for themselves as individuals. Before you go to your business, the good part with businesses is there's always a certain way of how business should run, of how your money management system looks like. We have financial statements, we have management accounts, we have all those things that help us to look at how our business is performing. But do you have a money management system as a business owner and as an individual? Why? Because if you do not have that, no matter how much money you make, you won't be able to see the fruits of it. Hence, we hear stories of people that had money 2 years ago or 5 years ago, and they'll always tell you stories of how they used to make 5 million kwacha maybe in 3 months once they get their breakthrough, or they made thousands and thousands of kwacha, but they don't have anything to show for it. Why? Because their money management system were a bit, I don't know, parallel in terms of how money used to come in. So that is something that I want you to keep in the back of your mind, is what are my money management systems? Do I know about investments? Do I have an asset acquisition kind of mind where when money starts coming in, I know exactly what to do with it? Because we can talk about financial management or cost management as much as we can, but the end goal is to get income coming in. So when that income comes in, do you know what to do with it? Is $1 million question at the end of the day. Yeah. So get into the mentality of wanting to acquire assets in terms of investments, assets in terms of real estate, assets in terms of diversification of your portfolio. You have an active business running. it's a beautiful business. It's making you great money. You have maybe 3 businesses running. They're making you great money. But what do you have to show for it? What are your assets at the end of the day? Do you have those assets? At the end of the day, when we value you as an individual, or when we value your business, what has your business bought in layman's language? What has it extended, or I don't know, planted over the past couple of years? Yeah. So the income is coming in, but what are we doing with that income that's coming in is the question. And that is something that I want us to get to, a mentality that I would want us to run. Yeah. Okay, so things like the stock markets, there's so much, so much that we need to look into as individuals, and I hope that is something that you'd be interested in. Even after this session, I would want you to go and look up certain investment companies in Zambia, certain portfolios that you can jump onto, or investment vehicles, sorry, that you can jump onto. We have bonds, we have treasury bills, we have mutual funds that you can jump into. They are beautiful, especially as a business owner, because then we're inviting diversification. Yeah, perfect. Okay, so yeah, that is something that I wanted us to get into. So it's about taking charge of your money. It's about knowing where your money is going, because I don't want us to be a generation of that told stories of how much we used to make money, but then at the end of the day, it kind of didn't work out. Yeah. Okay, perfect. So one of the things, sorry, that I would want us to look into is, are you, do you feel you're deserving of financial freedom? We look at people that are currently driving the huge cars. They're businessmen and women that are driving big cars. Why? Because they believe that it's time to get to a point of where they can make a certain amount of money. Yeah. So their target goes from making 5,000 kwacha per month to them aiming to 50,000 kwacha per month, or 100,000 kwacha per month, or they've told themselves every quarter I need to make 250,000 kwacha. The difference between myself and such a person is not because the other person has bigger opportunity than myself, is because for them, they believe that they want that financial freedom. They want the big money into it. Financial freedom for myself. I want that financial freedom for my business. Hence, you being very ready to your opportunity. Yeah. Okay. So, yeah, that is something that I wanted us to get out of the way when it comes to you being okay. So now we're talking about financial management or cash flow management. So in layman's language, what is financial management, or what is cash flow management? So this mostly just focuses on ratios, equity and debt as a business owner. So when we look at this, what does equity mean for you as a small business owner or as an entrepreneur? What does ratios mean to you as a business owner, and what does debt mean to you? So once you can master these, I can assure you that whatever it is that you do around your business will revolve around these 3. Yeah. So cash flow management, or let's call it financial management for now, is what can it do for you? Yeah, as an individual, how can you make use of these 3 keywords, which are equity, debt, and ratios. So ratios mostly, if you've ever done even just the most basic of accounting, it's mostly just to tell you how liquid your business is. Yeah. Debt is, what is debt? What is good debt for you, and what is bad debt for you? Yeah. And equity is your capital, your money that's coming in, your startup capital, anything to do with that. It's money that you're going to raise in the future, anything to do with that. So it's those 3 basics. So how is it important for a startup to ensure that their financial management is in order? For starters, it's It's the beauty in the sustainability in the long term. So one thing I would want you to start looking at is, no matter how small your business is, if you, right now, the one thing that you do is maybe you're selling hair, or you've recently started a construction company, or I don't know what business it is that you've branched into. I need you to start looking at it from a 10-year point of view. Yeah, because don't start the business because it looks viable now. Start the business because you can see a future for it. Is it a wealth building business? Is it a generation of wealth kind of business? Yeah, something that you would want your, even your children to jump into in the future. Yeah, so look at the sustainability, in the long run. And that is something that is very important when you're looking at financial management. Look at it as a long-term business and not just a business that you start today and you can wake up and abandon it. Don't have that mentality. Once you can get it in your mind saying, you know what, I can actually go head to head with the big corporates, with the people that have been on the market for a very long time, I can assure you that even your mentality and at the pace at which your business grows will be higher. Why? Because you've not limited yourself to, I'm just a startup. So your business has potential to grow. Every huge business that you see nowadays started from somewhere small, but because of their financial management or how they believed in themselves, the 10-year plan, the 20-year plan that they had, saw them through to where they are now, and we can look at them as giants on the market, yeah? So have a sustainable long-term plan. What is your sustainable long-term plan? Even if your business has been slow for the past 2 years, the past 6 months, how does it look like in the next 5 years? And that's something that you should look into. The beauty about financial management also is it builds investor confidence. Remember, every business wants to diversify, every business wants to grow. And at that point, then you need to start attracting investors into your business, yeah? So the one thing about cash flow management or financial management is it builds investor confidence. A business that has a track record of how their finances move, I promise you, is very attractive. Because then if you came to me or you went to an individual or a corporate or a financial institution and told them saying, look, my business makes 50,000 kwacha per month or 20,000 kwacha per month, and all I'm asking for is 150,000 kwacha or even 500,000 kwacha. But the problem comes in when they cannot see the track record of your business, yeah? That's where the problem comes in. So cash flow management or financial management will tell the bank, saying, you know what, I have a plan in place. This is how my business has been running. This is how I intend for it to run. And when you look at even the funds that, let's say, you require for me as repayment and all those things, I'm able to pay back. I was having a conversation with one of the presenters on a radio show that I was on, and we had this great chart on how small businesses, especially people that own boutiques, people that travel to China spend, let's say, 50,000 kwacha, yeah, or 60,000 kwacha, inclusive of their traveling expenses and all that. And when they come back, do you know that they make up to 200% on what they spend? Yeah, but the problem is, it's very difficult to communicate that to a financial institution via word of mouth if you do not have a track record of financial statements or financial management or just a systematic way of showing that my business is viable. Because if you go to them and tell them, give me 200,000 kwacha, I can pay you back in even as little as 4 months. But because you don't have a track record of that, they won't be able to believe you. Yeah, and that's where financial management comes in, and hence the long-term plan. Yeah, so it builds investor confidence. Once your business is able to show that, look, this is where we started. We started in 2016. We started out slow, but we've been growing. Yeah, and I need to know that as an investor. The other person needs to know it as an investor. Everyone is looking for where to put some money, but the only problem comes in when they can't see how viable your business is, yeah? Okay, so like we mentioned, do not wait until your company goes big for you to form a proper or systematic bookkeeping system. So know how to keep your receipts in order, know how to keep or your bookkeeping well enough. Everything, every spare no expense, anything that needs to be added to your financial statements, do it, no matter how small, no matter how, I don't know how to put this, but I need you to get into that mentality where you have this proper way of ensuring that your financial management is in order, and it's very, very well done, no matter how small your business is. Yeah, there are great benefits in a proper financial management system right from the day it's incorporated. So have that done immediately. You start your business, just have a very simplified system on how you can keep your records and keep them very well. Yeah. So what did I want to say? I've actually forgotten my line of thought. Okay, so one of the biggest benefits of financial management is, of course, it makes the business data driven. So you always have a reference point per se. Yeah, when you have a proper financial management system, is you always have somewhere to refer to. You can tell trends from how you've kept your financial management documents. You're able to tell, saying, okay, you know what, my business doesn't perform well in June, it performs well in October, and all those things. Or maybe just certain things, even just the type of services or products that you're offering, you're able to tell based on what it is that you're keeping. Yeah, so it becomes a properly well systematic business that is data driven, and you want that. Yeah, you don't want to leave it to the big corporates. That's how they make the big bucks. It's far from the goods and the services, but more into what data they get from their record keeping, and they're able to make proper financial decisions based on what it is or how the business has been performing. Yeah, they keep operating reports, so you can make those your operating reports and make them very, very well. Very simple. They don't have to be complicated. Another reason why most small or entrepreneurs or startup companies don't keep financial records is because maybe it might look expensive. Say, you know what, I need to hire someone with the knowledge of all these things, but I just need you to keep something as simple, simplified. Get a file or two, keep your receipts. At the end of the month, just see how much you spent, how much you made, how much are your profits, are you reinvesting your profits, what is going on. Yeah, that will show. The next time you come across a friend who's good when it comes to financial statements, just give them your 2,000 and say, you know what, can you do something for me? Yeah, just for future references. You don't know who you meet in the room that will want to look at your financial statement. So let's get into the habit of doing that. Is that okay? Okay, so one other thing is investors and financial partners are well informed and they're well guided. Yeah, when it comes to someone that keeps well or keeps the financial management system well, it's your investors are very well informed, your financial partners are very well informed. Why? Because they can see they're very, very well guided, and also growth is better managed. I don't know if that's making sense for someone, but I really, really hope it is. And you're able to grasp opportunities in a smart way because you know how your business runs. You know how it's been performing. So you even know what your business needs and what it doesn't need. Sometimes you start off with this particular type of products or this particular type of services, but as you see how your business is moving, because you keep a proper financial management system, you'll be able to see how this is not performing well, how maybe we should branch into something else. Maybe it's not, it just gives you quite an overview of what it is that your business needs and what it doesn't need. But you might not be able to get it. I understand that some people build it based on experience. I've been doing this business for the past 10 years. For the past 15 years, I know how to manage it on my own without needing a financial management system. But at the end of the day, you might need help at some point. Yeah, your business might grow. Imagine your business growing so drastically. At the end of the day, you don't have a track record of how it grew. I don't know if this is making sense for someone. There's some people that I've met that will tell me, saying this business has been existing since 2013, but they don't have anything to show for it. So it's via word of mouth. And you don't want that for your business. You want to be able to show, saying, this is how we've grown since 2013. This is 2020. I started my business in 2020. Come 2027, you'll be able to show, saying, from 2020 through to 2026, this is how our business has grown. And these are some of the trends that we've picked out and all those things. Make it simple. I'm not saying you should do it complicated in a complicated way, but make it, simplify it for yourself. Yeah? Okay. Yeah. So another thing is adopt a budget at the very start of your financial year. If your financial year is in February, if it's in June, just adopt a very simplified budget. Okay, what do I need? How do I feel the next 1 year will play out, or the next 6 months will play out, and start working on it. Yeah. Of course, you can always make adjustment depending on price adjustments in your products and all those things, cost of living. But at the end of the day, I need you to have almost like a broad view of how you'd want your finances to flow that particular starting year. Yeah. This is for startups. This is for entrepreneurs. I'm not talking about the big corporates. I'm talking about us, the startups, us, the entrepreneurs. It sounds like jargon, but I promise you it pays out in the long run. Yeah? Okay, I hope this is making sense for someone. We are almost getting to the end because I'm excited to get as many questions as possible so we can make this as interactive as possible. Another thing is, do not spend more than you make. If you make 10,000 kwacha, please, please, please do not go spending 15,000 kwacha. You do not have that kind of money. Yeah. I know in the beginning of the business, you might have to pump in quite a bit of money, but try to when doing your cost analysis, try to make it as minimal as possible. How can I put this? Try to stay away from expenses that will eat up more money than you're making. Yeah. So try not to spend more than you are making, especially how can I put this? Especially on an operational level. If there's certain things that you can cut back on, I am asking that you do. It's not very easy in the beginning, but I'm asking that you do. Try to keep within your business. I know you want to run the business. I know you want to put in as much as you can, but do not spend more than you earn. Try to keep yourself afloat the breadline. Yeah. That's one of the first things that you need to understand. Try to stay above it. Even if you're at the end of the day, you're only left with a 500 kwacha or 1,000 kwacha, at least you are not pumping in more money and pumping in more money. Do not spend more than you earn in your business. Yeah. Okay. And this will help only if you're keeping track of what it is that is making you spend so much. Is it transport that you're spending on too much? Is it salaries or wages that you're paying people? What is it that's making you spend this much? If you're bringing in items from a supplier, what is making you spend so much? But you're unable to see that if you're not keeping track of your financial management system. Yeah. See how it has all this connection. So you keep track of your expenses and pay attention to trends. Maybe for the past 3 months, I've been spending so much on transport. What do I need to do? Do I need to get a small truck? Or do I need to get a small vehicle? What do I need to do? Do I need to engage a courier service? Maybe it's much cheaper. Do I need to get my clients to start paying for their deliveries? It's those many expenses that will help you keep afloat the red line. So you need to start thinking outside the box. What is it that's making me spend so much on my business? If it's apart from the services or the products that you offer, well and good. But if it's additional expenses, I'll need you to start looking above and beyond to see what it is that you can start cutting off, or certain things that you need to start implementing that are long term, that are going to serve you long term. Are you in the farming business? Do you need to stop hiring? And maybe do you need to pump in a bit of money to get a small truck that will help you with your logistics? What is it? Yeah, look at all these things. But you're unable to see these things if you do not keep your financial management in check, if you do not keep all your books well. just simplified bookkeeping will help you so much. Yeah. Okay. So those are some of the things that we look at. And so one other big item is do not combine your business expenses with your personal expenses. Yeah. So that's it. It has quite a bit. Let me just finish up, then maybe I can talk just a bit about not combining your personal and your business finances, because that's where us startups or entrepreneurs miss it the most. You find that you're putting in your money, or your business money is doing so much for you, and at the end of the day, your business is not growing. Why? It's either you are pulling it down, or it's pulling you down, whichever one of the ways. So not combining your business and personal finances is one of the things that can help you with your financial management as a startup or as an entrepreneur. So don't forget to review your performances, and remember to compare with your budget every single time. Always go back to your budget. Is it more? Is it less? What do I need to do? Were my estimations wrong at the beginning of the month? Was I supposed to spend 10,000 kwacha on a product? Was I supposed to spend 10,000 kwacha on everything? But how come I'm finding myself spending on 17? I'm spending 17,000 kwacha instead of 10,000 kwacha. Where did I go wrong? What did I not account for, and all those things? So that the next time you're doing that, you know best but to buy products that are worth maybe 6,000 kwacha, then account for all the other expenses that you need to pay for. It's all those things that will look at trends. We'll be able to show you trends that are either slacking you back or just to keep you at par when it comes to your business. Yeah. So yeah, it will also keep you away from deviating from the actual plan. Yeah, because sometimes when you have a lot of money, you want to spend it on other lavish things. All of a sudden you have 70,000 kwacha that you did not expect because business went very, very well. And the first thing you want to do is, you know what, I should buy a car. Besides, it will help me with my business. Was buying a car in the initial plan? Yeah. Go back to your budget. Remember, we spoke about doing an annual budget. What will you need as time goes on? Can you afford to buy a vehicle right now? Will it not affect the rest of the year? And certain things that you need to keep in mind, or certain things that you need done for the rest of the year. What is it that you need to do? So prioritize. The good part about budgeting is it will always give you this preview of what you need done. It prioritizes things that need to be done. Yeah. So even when money comes in, unexpected or not, you always know where to channel it. I hope it's making sense for someone. So not combining your business finances and your personal finances. This is somewhere where I'll wrap it up. Then we can get quite a bit of questions. So number one is you're an entrepreneur, you're a startup. The first thing to do to avoid mixing personal and business finances is register your business. Yeah. Now we have Lyapa Enterprises. So what is the first thing that we're doing? Yeah. So we register it. We make it formal. We go big or we go home. We go to Pakra, register it, bam. You know what? Lyapa business is now formed. It gives you that confidence as an individual to know that you are doing the right thing. It gives you that confidence to even keep your books well. Why? Because this is no longer Lyapa's business. This business has a name of its own. It has a life of its own. It's its own. It needs to be managed well. So try to do that. It just gives you a mentality shift, a mental shift to know that I'm supposed to manage this well. Yeah. So the first thing is try and register your business. Pakra has made it very, very easy for all of us. Yeah. 2 is open a checking account for your business. I don't know why we don't do this. Yeah, we would rather use our personal accounts, but take it up a notch and open up a checking account for your business. It just puts everything into perspective. I might not be able to explain it to you, but it just gives you a mentality shift on how you're supposed to manage your business. And on top of that, like we say, there are a lot of things that you need to keep in mind in terms of the future, in terms of times where you will need an investor. Where are your bank statements? Yeah, not Lyapa's bank statements. Where are the business statements? Yeah, so that also falls into financial management. Where is your track record of of monies that were coming in, of clients that you are getting. Yeah. Okay. So keep all your receipts and documents. We keep talking about it. Keep them and keep them and keep them well. Yeah. Work with a simplified budget. That's the best advice I can give you. Do not complicate things. Make it as simple as possible. And now that you are a boss, now that you own this business, you are an entrepreneur, you're a startup, make it official. Take it up a notch and start paying yourself a salary. Yeah, it helps so well to keep abreast of how much you're making and how your business is growing. So don't say, you know what, whatever profits I make, I'll sort myself out. No, put yourself in a position where you say, I'm going to pay myself 5,000 kwacha for my business, and whatever it is that I'm making is either I'm going to reinvest it back into the business, or I'm going to find an investment company and I'm going to put it in some mutual fund somewhere, or the business is going to own some land somewhere where you start asset acquisition and all those things. So remember, we spoke about having to show something to show for it. Yeah, that's where this starts. So now that you are running this beautiful business, now that you've taken the step of becoming an entrepreneur, at the end of the day, what will we have to show for it when push comes to shove? Yeah. So those are some of the things that I'll need you to start getting into perspective. At the end of the day, as a business owner, I want to see myself grow. I want to see my business grow. But what do I have to show for it? That 5 years down the line, or 10 years down the line, I don't have just bad stories to tell. Then at some point we used to make millions of kwacha, or I got a big deal at some point. But what do you have to show for it? So even when you're getting your profits, instead of putting them in a savings account somewhere, where can this money start going? What can it start doing for me? And those are some of the things that I need you to start thinking about. I hope this has helped someone. Again, I apologize for coming in a bit late. I had a bit of a glitch with our in-house Wi-Fi, but it was sorted. And yeah, so maybe I can take in a few questions. I will throw it back to Joseph to see if we can take in a few questions. I don't know if Joseph is there. Is he around?
Yes,
Okay, perfect.
certainly an insightful conversation that we've had. So we do have a few questions here. The first one being from Salome. She says, Lyapa, how do you set aside personal expenses from business finances and actually stay disciplined?
Okay. Sorry, let me just read it. How do you set aside personal from business finances and actually stay disciplined? So remember, the first thing that we said is it's a mentality shift. Now that you're a business owner, what are some of the things that you need to put in mind? Yeah, it's no longer you as an individual, but the business has an identity of its own. So financial management or personal finance means that you need to start by disciplining yourself. So no matter what I will tell you, unless you make a decision to say, you know what, this is my business money, I want this business to grow, this is the plan that I have for this business. Remember, we spoke about trying to see the business from a 10-year plan, from a 15-year plan, from even a 5-year plan. As long as you have a plan for your business, it will sink into your mind to know that, you know what, I need to have a plan for my business and I need to stay away from that money. So the first thing that we spoke about is register your business. Once your business has an identity of its own, means you can now give it what it's due to, yeah? And two, opening a checking account, open separate accounts from your business. So you have your own account, you have your own business account. No matter how small the money that comes in, even if you make 2,000 kwacha from your business on a monthly basis, let the 2,000 kwacha sit in the business account. Then if you're going to pay yourself a salary from it, then you can do that, yeah? But try to stay disciplined. Try to keep it in your mind to know that it is your money, but it's the business's money. So just try to follow some of the steps that we've spoken about in terms of especially paying yourself first. Get into the idea of even transferring money from your business account to your account. It even becomes you even feel a bit lazy, as per se, to always get from your business account. Why? Because you know that that's not your money, it's your business's money. But have a mentality shift. Do you want your business to grow or not? Or else, no matter how big or no matter how small the money is, you will run it down. But you need to have a plan for your business. Is it short term or is it a long term plan? I hope that helps. But open a separate account, please, and pay yourself a salary. Okay. Joseph, are you there, or should I just go on?
We can go on.
Okay. So I have a question from Emmanuel Mushashu. It says, hello, great session. What are the free or affordable accounting softwares that you would recommend for startup companies? I have a gentleman. Let me do this. Let me see if I can share one. Okay, let me say 2 or 3. I'll share them with Joseph, then he can post them on the page for you. Then you can look them up. Yeah. Let me just ask 1 or 2 friends. There's some that are a bit more affordable, or to even see if we can find even local individuals that actually offer financial services at very affordable fees. That should be able to help out. I hope that helps. So we have Lumba saying, please explain a little more on equity and ratios. So like I mentioned on financial management is mostly, it just focuses on ratios, equity, and debt. Once you can master this as an individual or your business, it goes or extends all the way into your business. So equity, like we mentioned, equity is just raising of funds for your business, yeah? So financial management helps in the sense that you'll be able to, your financial management bookkeeping, how can I put it? Bookkeeping process will help you with your fundraising or your equity raising, yeah? So also it will help you understand if what type of good debt there is. There's good debt that will help you extend your business, yeah? And also, the good part with financial management keeping is it helps you with ratios. Ratios simply just show you how liquid your business is. Is it viable or is it bound to go down at some point? So mostly great financial management systems, or you keeping your financial management well, will be able to show you a broader view of where you stand in terms of the equity part, and instead of in terms of the debt part, and in terms of the ratio part. How does your business look like in any of the 3 categories? Okay, so hey Lyapa, thank you for this. It was so insightful. On the part of putting yourself on a salary, does it also work to give yourself a standard percentage of the profits instead of a fixed amount? This is from Milando Mulomba. Yes, so you can do it both ways. The one thing when it comes to either percentage of profits is, it might then vary from month to month. I don't know if that is something that you're open to. If you put yourself on, let's say, a 3,000 kwacha salary, or a 7,000 kwacha salary, or a 15,000 kwacha salary, is already you've done your projection, hence your budget. You've done your projection on how much your business makes. In a good month, how much do you feel in a good month you might make? How much do you feel you might make in a bad month? Then you do almost like an average. How much can I pay myself then? So if you put like a fixed amount on how much it is that you can make due to your projections, I think it's much better putting yourself on a fixed amount. But if you want to go on a percentage based, I guess we can try, but 50% sometimes might be a huge chunk. In a good month, 50% might be very minimal in a bad month. So you also want to look at those also, yeah? So how do you work on keeping your discipline consistent? Would you vouch for having an accountability partner? I always love accountability partners. This is from Mr. Jason. Having a mentor, having an accountability partner, and also having a business partner. I vouch for having a business partner in the sense that it also gives confidence to investors, to financial institutions, to just anyone that wants to come on board. Why? Because then you know that someone will always keep you in check. Yeah. Salome asked earlier on how to become disciplined. If you have a proper business partner, you will know but not just to take a 1,000 or a 1,500 from your account just because it's a Friday to go and spend it on some money, someone will always question you. Yeah, where is this money? Why are we taking out 1,500? For what reason? So those are some of the things that you want to keep in mind. So get yourself an accountability partner. If you can get yourself a proper business partner, even better. Okay, thank you for the opportunity. At what point do you advise a startup to engage an accountant or someone to manage the cash for the business? If you ask me, if your business can afford it from the very start, but only if your business can afford it. For now, keep something as basic as possible. Just keep your receipts in order. Someone asked earlier if there are affordable um, any affordable accounting softwares that we can look at. We can look around for those, something that already has templates that you can just punch in your numbers and you're able to tell or be able to see how your business is running month in, month out, and at the end of your financial year. So if you can afford it, for me, I'd vouch for at the beginning, right when you start. Yeah, if you have a friend, we can't afford the PwCs, we can't afford the Deloittes, we can't afford all these huge, huge accounting firms. But something that I would want you to do is, even if you have like a very, very good friend that is very abreast when it comes to financial management, bring them on board and just ask them, say, what can I do to just ensure that my business is running at a systematic way, a very, very proper way. I'm trying to do some bookkeeping for myself. So see if you can do that, but at the very beginning, I vouch for the very, very beginning. Okay, so we have JJ who says, hi Lyapa, I believe one of the things that inhibit proper financial growth for startups is the inability to get prompt payments from clients. Any advice on how we startups can get prompt payments? Okay, perfect. I am a financial advisor, and the first thing that I advocate for is, like I said, financial resilience in the beginning. Get a backbone for yourself. When you're a startup, it's very easy for a company or for your clients to take advantage of you. Why? Because they can get the minimal quotation from you. It might be the least quotation. They can push you around for the shortest delivery period. Instead of saying 14 working days, they can push you to 5 working days. And this is when you find yourself having sleepless nights because you want to deliver. Yeah, it's good when you're a startup because you are trying to build the face of your company, but at the same time, you need to get yourself a backbone and you need to know what it is that you want. Because remember, how you treat your client in the first time is how they begin to view you as time goes on. For me, I always advise put systems in place, make them as plain as possible. Yeah, especially when it comes to your money, make it as plain as possible. Write it on your invoices. We can only start the job if 50% is paid before we touch your documents, before we deliver your goods, before we deliver the service. 50% has to be paid, and 50% should be paid at delivery. I know it's a bit difficult because of I don't know, the type of economy that we have. You find that other clients will tell you it's a 30-day or 60-day, or we'll only pay you after 30 days or after 60 days. Those are some of the exclusions that you can make. Maybe once in a while you can take up those clients, but clients that you know that can pay upfront, please put it in red, highlight it and say, you know what, 40% before I touch your job, before I start your works, 70% before I start your works. Make it as plain as possible. Make it as plain as possible. It's better they know that if I'm going to J for this job, or I'm going to this company for this job, they do not start until we pay them 50%, especially when you've had a bad experience in the past. But make it plain. By all means. By all means. Yeah, I have certain people that do not even take jobs if they are not paid upfront before the job is paid. But that is a decision that you're willing to make as an individual, as a startup, as a business. Yeah, so awesome insights. We actually have Nyamuka books, which we developed for MSMEs, just like QuickBooks. We are offering first 6 months free and $7 per month basic. So Perfect. We can actually post that. And how possible is it to separate personal from business expenses in the case where family knows the business is doing fairly well? It becomes almost impossible for them to understand when we say we are broke. Get yourself a backbone, learn to say no. I think when you go down on any of my Facebook or my social media pages, you'll find certain things in terms of personal finance. Learn to say no. Yeah, you're trying to build a business, you're trying to build wealth for yourself, you're trying to acquire wealth for yourself. You can't not. I promise you, you cannot dish out money. You don't have that money. Hence the discipline of keeping your finances separate from personal to business. So your personal account only has 4,000 kwacha. Your business account has 35,000 kwacha. And someone comes to you and says, I need a 7,000 kwacha. You don't have money. You have 5,000 kwacha. Lend them out your 5,000 kwacha. But the 35,000 kwacha is not yours. It's for the business. Yeah? So those are some of the things that you need also as an individual. It doesn't matter how good your business is doing. If you don't have the money, you don't have the money. If you get paid a 5,000 kwacha as a salary, that's the only money that you have. The 35,000 kwacha is for your business. Get yourself a backbone and learn to say no. It sounds mean, it sounds cold, but if you're going to grow a business, you need to have a very firm foundation and have a very strong background where you're able to walk away from certain things that you feel your business won't appreciate. Right now, we have a lot of investment hacks that are going on, saying invest this much, get out this much, and whatnot. You'll find yourself putting money or these poor money placements. Why? Because you don't have a systematic money management system. Remember, I spoke about a personal money management system. You don't have money. Yeah, your business has money, but you don't have money. Learn to say no. Learn to say no. We have a lot of black tax as African young people where we constantly feel the need to dish out money. But you're not going to grow your business if you're always the person that is dishing out money. Okay, so how do you deal with hand-to-mouth syndrome? This one is an issue. It really, really is an issue. So one of the things that you need to keep in mind is, remember I spoke about financial resilience, you knowing, you believing that you are worthy of financial freedom. Yeah, you need to get to a point as an individual where you say, I am worthy of money. I want to acquire wealth. I want those assets. Yeah. When you get that mentality, remember I spoke about money moves to those who value it the most. So get yourself that mentality where you start saying, I want to become wealthy. I need to start making a lot of money. I want to have these assets. I want to have a proper investment portfolio and all those things. Then you'll stop living the hand to mouth. It's not that I'm telling you that money will fall from the sky, no, but I'm telling you that even your mind will be open to opportunity. Wherever you see a need, you want to correct it via opening a business, via an investment opportunity, whatever it is. But it's a mentality aspect. There are certain people that are very okay with, let's say, taking home even 25,000 kwacha. That's a very, very good amount. It's a very, very healthy amount to take home. So you take home 25,000 kwacha. What is the Zambian mentality? Graduate from university, get a very good job, get married, buy a plot, build a house, build a plot, buy a plot, sorry, build a house, get yourself a car, have children, retire, buy a farm. That's it. I think I'm correct if I'm not mistaken. But then at the end of the day is, do you want more for yourself? What differentiates us from the people that we here have a huge real estate portfolio? They have $10 million sitting in the bank account. They have multi retail store chains and all those things. What differentiates us from them? Why? Because for them, they believed they wanted more. They started from where they were. People will tell you, I started with 5,000 kwacha or 10,000 kwacha to build this business, but they wanted so much more for themselves. It's the financial resilience. It's It's the ability to want so much for yourself. What can I do? Every time you see an opportunity, you grasp it. Yeah, there's risk involved, and please be aware of the risk, especially as an entrepreneur or a startup. But you need to start wanting more for yourself. Financial freedom. I want more for myself. I want more than just building a plot, building a house on a plot, moving in, retire, and that's it. No, I want to retire at the age of 40. What am I supposed to do for me to retire at the age of 40? I want to travel. Every year, I want to take one holiday for myself. I want more than one house. I want to build 10 houses somewhere, put them up for rent. I want so much. I want a business that is viable, a business that is long-term. What do you need to do for yourself? It starts with a mentality. It starts with a mental shift. Okay, I am worthy of financial freedom. I cannot do hand to mouth. I have a job that gets me 5,000 kwacha. What can I do? Can I use that as capital to start something? Can I save up maybe for 6 months so I can start something? Then after that, can I start something? When that income is coming in, where can I reinvest it? Yeah, this is where you find that, we have gardeners and maids that are so entrepreneurial in their thinking, where you find that they have so much going on. Yeah, we find that a maid that takes home 1,000 kwacha has built a house. Her and her husband have built a house. They are selling tomatoes here, they're selling charcoal there, they're selling what there and what not. It might not be our type of financial freedom, but they are making more money for themselves. So what is your version of financial freedom? Yeah, and that is something that I need you to get to. What do you want for yourself? I asked earlier, what is your $1 million plan? You need to get to a point where you understand that it takes 10 years for you to make $1 million if you're going to be properly systematic in what you do. 10 years, minimum at least of 10 years. So what are you going to do? Do you even have a plan for the next 5 years, for the next 10 years, for the next 15 years? How much do I want to be worth in the next 10 years? That is something that you need to keep in mind. Do I want to have 5 million kwacha in the next 6 years? Then you start working backwards. What do I need to do to get that 6 million kwacha, that 5 million kwacha? What do I need to do this and all those things? So get to a point where you stop making excuses. It's either you make money or you make excuses, but you can't make both. So if I take home 5,000 kwacha, what can that 5,000 kwacha do for me? But you need to stop the mentality of hand to mouth. It will not take you anywhere. It won't. Especially we're young. We still have the drive. Your 20s and your 30s are for money making. You need to get to a point where you're so aggressive with money making. Financial freedom. You grasp every opportunity as it comes. So stop the mentality of hand to mouth. It will not take you anywhere. And stop making excuses. No one owes you nothing but yourself. Yeah, I hope I answered your question. Okay, Joseph, do we have any more questions?
Okay, I think it appears we do not have any further questions. Okay, I think we have one from Katanga here. It says, I also face an issue with separating my personal expenses from my business expenses. Is it advisable for me to use a different savings account for my business, as it is not yet big enough to register with BACRA?
Perfect. Please do. Please do. So have a separate savings account from your business. And the good part is we have all these banks have a department strictly for SMEs. So no matter how small you're making as a business, they'll always welcome your little money. So have a chat with any of the relationship managers. See if you can open a small business account and throw in whatever it is that you're making. Yeah, it should work very, very well. And you find that some of these savings accounts, they might not give you as much returns, but at least you're making something minimal on it. But also, I would want you to look around for mutual funds that you can throw in your funds in. Especially these investment companies do have mutual funds where you you put in a 500 kwacha, and it's at least giving you some sort of return. If it's a 5,000 kwacha, you can put in a month basis, but start making even just a bit more money off whatever it is that you're saving. So see if you can get yourself an investment account from any of these investment companies. Yeah. Okay, and that should be able to help you. And one other thing with Pakra is you might not be able to register it as a company, but register it as a business name. Just anything to separate it from your name. Yeah. Okay, so much insight. Thank you for tuning in, Malama. Glory says thank you for the feedback, very insightful. Thank you so much. Do Mbewe is asking, saying, hi Lyapa, could you explain more on bonds and treasury bills? So bonds and treasury bills are investment vehicles that are done by the government. So it's practically them looking for private investors, which is you and I. So these they're issued via, how can I put this? If you are a small startup, you can go the way of the bank or mutual funds. So mutual funds mostly, or okay, let me stop saying mutual funds. Let me say unit trust. Unit trust mostly compound money from different individuals and make a huge amount that they can now invest in a bond on your behalf. So bonds are mostly in 2, 3, 5, and 10 years, if I'm not mistaken. Yes. So how bonds work is if you have a 500,000 kwacha, you can either go straight to Bank of Zambia or you can go via your bank. So when you pump in your 500,000 kwacha, it's mostly on the capital preservation end. So you put in your 500,000 kwacha, there's an interest, a return at the end of, let's say you want to go in for 2 years or for 3 years. So you can put in your funds for 3 years, yeah? So at the end of the 3 years, let's say the cap is sitting at, give or take, maybe 21%. So at the end of the 3 years, you get your 500,000 kwacha plus your 23%, yeah? The beauty about bonds is there's what we call coupons. So coupons are what you get every 6 months. So the government understands that, look, you've given us your 500,000 kwacha. What are you left with as an individual? So they'll give you what they call a coupon. So a coupon also has a rate. Let's say the rate is currently at 9%. So the beauty now is they're calculating your 500,000 plus your 23%. Then they add that money, then calculate the 9% of those funds, and they'll pay you that money every 6 months. So they'll pay you 9% every 6 months. Then at the end of the 3 years, they'll give you back your 500,000 kwacha plus your 23%. It's the most beautiful thing to ever happen to humanity. I love government bonds. If anyone has a hefty amount of money seated somewhere, please push it in. The beauty about government bonds is up to date, they've never defaulted. So they do not default to private investors. They would rather not pay everyone else in the civil servants, but they would rather pay the private investor first because they know that it's hefty amounts and they need to still keep the investor confidence. So they've never defaulted. The Zambia government have never defaulted in terms of bonds and treasury bills, unless I haven't read about it, but I've never heard of a default. So that's some of the things that you need to keep in mind in terms of a bond. So if by any chance, let's say you have a hefty amount and you're looking at, let's say, going into a project, I would rather, please do not take this as investment advice. It's me saying it out. I don't want to come back and say Lyapa told me to do it. So if let's say you have a 200,000 kwacha and you want to pump it into a project, if you can wait 2 years and pump it into a government bond, it's capital preservation, and let's say use whatever you're getting from the coupons to finance your project in the interim. And at the end of the 2 years, you can still get your 200,000 kwacha plus your interest plus the coupons that you've been getting every 6 months. I don't know if that's making sense, but that's how government bonds work. Treasury bills are more short term. We have 90 days, we have 30 days, 90 days, 60. yeah, 60, 90 days, and 120, if I'm not mistaken. And we have a 1-year treasury bill. So all those are investment vehicles. At least the money that needs to be pumped into treasury bills is a bit less as compared to government bonds, but they're all investment vehicles that we should all want to jump on. Yeah. Joseph, do we have any other questions, or we can sum up? Thank you very much. Amazing session. Thank you so much, Makua. Okay, Joseph, I think over to you.
Okay. Okay. So just in response to, I believe that was Emmanuel that asked the question about about affordable local accounting solutions. So we at Nyamuka Africa Solutions have actually developed an accounting software, and I think that's the one that my colleague Stephen highlighted about. It's called Nyamuka Books. So it's basically an accounting solution that aims to help SMEs and startup companies like most of us here to ensure that they keep their books, their accounts in order. So I've just shared a link to the software there, to the website. You could visit it and register there. We're actually in the process of developing a mobile application as well to make it easily accessible on your Android or your iPhones. But yeah, so this certainly has been an insightful discourse that we've had here. I think we've all learned quite a whole lot here. I believe we all came here expecting one or two things, and I believe that our expectations have been met in entirety. So thank you so much, Lyapa, for making time to share your knowledge here. It's been an insightful conversation, certainly. We look forward to
having me.
So at this point, I would like us to take a group photo. I'm sure you're all asking, how do we take this group photo? Okay, so could you all just kindly turn on our videos, and then I'll take a screenshot on my laptop here. So this is just for our archive here to show that we had a startup Converse, and these were the number of people that turned up. Yeah, so let's just kindly turn on our videos and let's take a group photo.
Let me just turn on my light also. Let me just turn on my light.
Perfect.
Perfect.
Okay, so let's just turn on our video and let's take a group photo. Okay, so just before we take a group photo, Gladys, you were asking if this session has been recorded. Yes, certainly it has been recorded, and it's going to be available to be on our website, Nyamuka, www.nyamukaafrica.com, and you'll be able to find the recording there by close of day tomorrow. So just waiting for the others to turn on their videos, and then we take a group selfie. Okay, where are the others? Mr. Jason, waiting for the others. Let's take a group photo, guys. Okay. All right, so let's all say cheese.
Cheese.
Great. All right, so thank you so much once again to you, Lyapa. Thank you so much to everybody that turned up to this startup Converse. So this startup Converse is held every month, every first Friday of the month, unless communicated otherwise. Today is obviously not the first Friday, it's the second Friday. So we had a couple of other engagements last week. That's how come we couldn't have it. But look forward to another session next month where we'll be having another insightful conversation, just like we've had here with Lyapa Mbewe. So Lyapa, we look forward to engaging with you once again. in the very near future.
Definitely. Thank you so much, Joseph, and thank you to Nyamuka Africa. You guys are doing a great job for our startups and entrepreneurs. This is exactly what we need. And I hope we do make you proud by the information that you are availing to us. And I hope everyone will be able to learn something so that we can all have sustainable businesses that, you know, in the long run, we can all point back and say, you know what, Nyamuka Africa actually did help me into doing ABCD. And now I am a top-notch, well-informed individual. So thank you so much.
Right. Mr. Steven, your closing remarks, and then we call it a day.
I just wanted to say thank you also to our wonderful speaker for the day. This was a real masterclass. It was like more of a masterclass delivery, and yeah, it really, you know, myself, I've been in business for about 16 years. Of course, when I say I've been in business for 16 years, I've done the Kantemba, I've moved around with the box of fruit. It's part of the 16-year journey. But if I have to admit that if there's one thing that I've not yet mastered, which I pray that I'm going to master, is this very topic of financial management. You know, like I'm that person who learned it after you are deep inside the business. And I think even our accountant is here listening in. He knows that I'm struggling with him every day. So this was very helpful, you know, I'm going to try and cooperate with him very well so that we do the right thing. I know that's the only way to go. So I just want to thank you and all that attended. We were going to be calling on you now and then. We understand you have a busy schedule, but already the relationship has started. We are going to have the Lusaka Startup Week 24 to 28 August. I believe Joseph is going to reach out to you and see if you can spare some time, you know, to come and share what you have shared with a few of us, if maybe you have a bigger audience, so that we can impact more of the startup community. Thank you very much.
Thank you so much, Pastor Stephen. Thank you very much for having me. And thank you to Nyamuka Africa and every single person that joined in. Okay. Over to you, Joseph. Thank you.
Thank you so much to everybody. Please do have a productive weekend, and please enjoy responsibly. Thank you. Take care.
Thank you. Okay.